chance on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in February 26, 2021, and the stock market is actually going crazy. But this time it was the bond market. The NASDAQ closed down 3.5%, 600 points on the Dow Jones, but the real highlight of the day was the bond market, and it has been going crazy, and we have a lot to talk about. So there was the GameStop short squeeze. It kind of lasted, kind of was short-lived. We didn't have any Powell, but we got to hear from the Fed. But the main issue now is bonds, this return to normal, and what this means. A lot of people have been confused. A lot of people are saying this is because of the GameStop stuff. I really think it has to do with bonds, and we even made a big play off of it. So we got a lot to talk about. I want to go over what happened in the market today, what we're looking at for the end of the week and coming into next week. I have some certain predictions, as well as now the plays that we made today and what we're looking at for tomorrow. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you want to be surrounded by a bunch of people that trade for a living and then also trade while making a living, then yeah, we're the place to be. And the most important thing you need to do, post or watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, the bonds were really bad today. I don't know any other way to stress this. Even the ratio comparing stocks and bonds, everything was bad today. So this was more than just the rotation, but the fact that that bond streak of the yields going up has continued, that has not been a good sign at all. So this was a really big key, because now today we didn't get any Powell, and the market has literally just came back right to when we saw all of the issues happen with bonds. So Powell gave us a 2-day save, but now you're literally right back to the middle of the low before Powell was speaking. And remember how big this day was. It's not like today. Today was still a big move, but remember, we were tripping out on that Tuesday because we were already down 3% within the first 30 minutes, whereas this was a lot slower of a move and took all day. So we've got to see the digestion, and now tying that into Powell, he wasn't there to say anything. There was a couple Fed people. Remember, I told you Williams and Bostic were going to be speaking, and they pretty much held the line, and they said they weren't worried. And I thought this was kind of important, and it could have contributed to what we saw today, because they all started saying this thing. They're saying historically the rates are still really low. Powell held the line, said they don't really see the problem yet. All of the other Fed people are in unison. They're all going to be kind of saying, well, historically everything's low, so they're not too worried about it. So I think that's going to be that defense they're going to use, and that could be contributing to what we're seeing. I think that might cause the tantrum here if we start to see bond yields keep rising, and now that is going to be the key with all of this. So I'm sorry, Dave Portnoy, we love you, everything, God bless you, but GameStop did not cause this. Even though that short squeeze stuff happened, maybe people thought this was an opportune time because of the bonds, but overall it is this reaction in bonds that has caused this. Now, not only is there an alternative to dividend stocks, you could get a bond yielding the same amount now as some pretty solid dividend stocks. Even then, the 10-year now is yielding more than the S&P 500, but this is also the exact same unwind from the wind up that we saw in March. So we've hit TLT many times. We love bonds here, but this was that first wind up in March. Imagine what caused this. Something was definitely happening. People were like, whoa, this virus, all of this stuff. The people with all of the money started freaking out. That's why bond yields were going down. They shot down. Powell stepped in again. He reacted, and he knows when to react. So maybe we could have faith in that. But this same big movement is equivalent to this same drawdown. Since the beginning of the year, all we did is have rates skyrocket. But even in this last 2 weeks, it has been just straight down. And this is getting crazy. Some people are even equating this to a flash crash in the bond market, which is pretty nuts to think about just because of how fast this is occurring. I talked about this today, but people are now finally paying attention. Every single day, you saw the bonds, you're like, I don't know what's happening. Okay, it looks like it. But every day, the fact that it just keeps going up now, little by little, a lot of market participants are all looking and saying, well, what's happening? And that is what you need to ask. It's even affecting the real estate market and everything else right now, because rates are going up. And when you start seeing rates come back to levels we were at a year or two ago, but especially pricing in COVID now, that means that we've gone back to the levels of bonds pre-pandemic. So this is meaning that people are aren't really expecting what they needed to. And the fact that we had those really, really low rates, that was because of COVID. So this has to do part in part with that kind of unprecedented recovery. The fact that the COVID cases and all that, you're seeing that recovery, the vaccine rollout, pretty much the bond market is pricing back a return to normal, and it has done so very aggressively. And that is what is causing these moves, or at least that's where I'm leaning to. It's really hard to say what it is, but you see all these little factors. But the big money is moving. Nobody gives a shit about GameStop. They really are caring about bonds, what this means for future funding and all that, because this is a regime shift. It's changing everything across fixed income. What is a normal rate? What you could get? It's even changing refinances. Why would you refinance now at these levels when it's the same rate as a year or two ago? So the bond market and big money is telling something, and this is very key, and especially where we move forward from here and how the market takes the Fed responding, that is going to be the key. So coming into tomorrow now, pretty much my prediction is going to be if we gap down tomorrow and we gap below that close from Tuesday and right where we were at today, I would even look for a rip and then have it kind of hang out at this mid-level and stall out. But if we gap up, I think we might end up selling off throughout the day, and then that could set us up into a bad next week. And essentially, if we close red, next week is going to get really ugly. If not, we should be able to see bonds chill, but that's what people are going to start looking at. It has to do with the velocity. The bonds are running and it is looking like it's out of control now. So that is why tomorrow is going to be very, very important. So I hope you're ready and patient, but that is pretty much it. So let us get into the plays. So right off the bat, I have a couple of different plays that I want to go over, but the one you guys are probably going to be interested in is EEM. I made a big play on this, and I actually like it today. It has time, and it's already went up. That's what I don't like, and I have some of these other plays, but this isn't the traditional hedge play that I make as much as it is a play related to the interest rate. So usually I'll get some of these every couple of months. I'll get some of these puts. It'll protect. You guys have seen me do that, but I really, really like where this is at with rates, because if the rates do go crazy, the fact that you've seen that run up the size of March, the question is, do the wheels fall off the tracks and does this get a little bit more crazy? That could create a volatile opportunity, but I don't really like the downside with TLT too much. And we talked about this at the beginning of the week. People asked me about this. I gave you that mini lesson. Who is going to be more sensitive to rising rates? It's going to be these foreign companies. So I went with the EEM play. And if you want to simplify, if you guys have any plays, post them. Anybody with foreign debt or big foreign government debt, those are going to be the real losers of this trade, especially if our rates keep shooting up. Again, there is a regime shift across debt and fixed income. So as far as the play itself, and look at this swing today. It's like an $8,000 swing. Ooh, but we keep humming along. This was the play I grabbed. I grabbed the June 2022. So these got about a year and a half. Grabbed 100 of the $20 puts for 27 cents. So I spent $2,700. They're up 66%. I could make them free, but I want to hold off for a little bit and see how it does. But these are super, super far out. These are the furthest ones on the option chain. This is a 50% move. The interesting part, if you look at the break-even straddle, the chain was pricing in like $15 for 2.5 years up or down. So it was interesting how I was able to get these at these prices. They weren't that expensive, so I want to see, but I'm still holding all those other EEM plays. If you guys remember, so we had these June 2022s we got a while ago. So those were some of the more hedge plays. We made some of those free back in the day, but I just like this again, all related to rates. I think that's going to be good. So that is the first play. I don't know if it's the play of the month, maybe, but I do like this one a lot better just with how we're looking. So go small, don't go too crazy. Nobody really knows what's happening right now. Anything could get a little bit wacky. None of this is a recommendation. Option traders only risky. There's no financial investments, no financial educational purpose. Only think of a day. But that is going to be the first play. The second play I want to watch out for is going to be Twitter. So they had similar news to Snapchat this week. They had that little investor meeting, but they announced something similar that they expect like 50% revenue growth over the next few years. They shot up a lot in the morning. They were up like 9-10%. I got in really, really bad. I didn't even look to see how they closed. Kept it small. I grabbed March 19th, 110 calls for 63 cents. I thought it was going to kind of hold up like Snapchat did, and it still ended up green throughout the day, so it kind of did. That's why I'm hoping it could carry on tomorrow, but those ended up dropping 50%. So that was the second play, but I still want to see if it holds up kind of like Snap, because Snap still had a nice 2-day run up, even though the market was kind of going down. So I want to watch that, see how that one plays out. Kind of made it unique, but that is going to be the second play. As far as the third play, OSK and Workhorse, there's a political drama over this deal. We got a nice little laugh out of it because I don't know if it was the whole House, I believe it was just one House member. They said that they want to challenge the deal between OSK and USPS, and that is the reason why Workhorse dropped yesterday, so that could benefit them now. But pretty much what ended up happening, OSK started dropping, but then Workhorse got a little bit of life in it. It's still running up. They halted it, but it keeps going. So I'd watch how this drama plays out, but we were kind of able to snake the chain. I grabbed this OSK March 19th, 85 put for 30 cents, but I think it closed at like 120 or about $1 on the ask. So we were able to snake the chain. There wasn't that much volume, but pretty much Workhorse shot up because maybe they have a chance now at the deal. It's not over. And then that's why OSK drop, but there was a little lag. You could go watch us when we traded that one live. It was pretty interesting, but I want to watch for a follow through on that coming into tomorrow. And then finally, the last play I want to look at is going to be McDonald's. I think tomorrow will be the day depending on how the market moves. So if the market gives us a clear signal, we see that broader sell off again, McDonald's is kind of at that level. I plan on using them as a place marker and then even looking at those Bank of America and the banks, some of those leaders this week, but they are going to be the one I want to watch tomorrow if anything goes crazy. We got some of that insurance today with the EEM. We have some of those other plays now. They came to life. If tomorrow's big on the downside, some of those puts that have been in the grave, you'll start to see them move up. That's just kind of where we're at with the volatility. So I want to watch for that. But if we want to see any responses, Friday, if it gets crazy, McDonald's is going to be the winner I'm looking at on either direction. So let's see what happens. So those are going to be the main plays. As far as everything else, watch Spotify. I'm still in this one. Remember I sold that 325 put? Well, I'm getting clapped on it. It's now in the money. So I'm down $2,700. So you can see, or 2,300 because that's just the total value we collected, $400. Still holding that out. Again, if anything, worst case, I'm obligated to buy it. I got a little bit of time, so it's going to be a fun 2 weeks. This one just pooped on me, so we'll see what happens. But the idea is hold till expiration. It's going against me. I could stop the bleeding now, but I don't want to sell while it's going against me, while there is still time, so you'll see what happens. But I'm going to be watching them. Watch the EEM, like we said, OSK, Gamestop. I don't know if it's shooting up after hours now. It was tripping out a little bit, but the only interesting thing is like halfway through the day when the market was dropping, they started to react, but at one point, you saw it get dragged down too, and this is what I didn't like, but it still ended up holding up. Kind of reflects that Twitter, so that's interesting. So watch them, watch DraftKings. They have earnings tomorrow. I have that leap. I decided to hold it. Pretty much nothing has changed, so we're going to be at risk tomorrow. We'll see how that plays out, but the market is not looking good. Watch the airlines. They ended up closing down, and now this is where it gets interesting because value stocks got clapped today, so I want to see how they play out and watch some of those other leaders. Even HD sold off even more from the earnings, so watch how that influences some of those other plays. You did see some strength out of the banks earlier today. Remember, these contracts were up a lot, but they sold off, so the key is going to just be watching everything we watched already this week. Know those laggers and leaders. Pay attention if it's either a broad market or you're getting a rotation, and that's going to pretty much open up some of these gaps. So I'm still holding out everything, regardless of how this plays out, even with bonds and even moving into TLT. It's probably going to cause a multi-day move where it's just going to take some time. So play strategic with all these. Make sure you guys are getting time and don't be afraid to be late instead of wrong. But finally, like we were saying with TLT, you just want to watch the velocity, see if it keeps going lower, watch it to lead the stock market. I would watch the dollar a little bit, but even the question is, when is the dollar going to catch up? But right now, the bonds is making the real move, and pretty much once the bonds settle in, the dollar will start to react, and that's what we want to look for. But right now, if those rates keep getting high, that's going to exasperate the situation, or it's going to cause more movement. If the rates chill, then the market will probably chill, and then you'll have your signs. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember you got the wealth of the master. Don't have the mentality of the slave, but the goal loves you. I love you. I'm gonna see you in the morning. Let's go.